Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and we're going to be looking at our current move to the downside. So, again, as we said earlier, we made a video yesterday saying Bitcoin, just a fair warning, and this is exactly what I was warning everyone about, right? It's all fun and games until you wake up and your entire portfolio is down 20%. And I imagine if you're overexposed on altcoins or you don't have the majority of your portfolio in Bitcoin, then you could be down substantially more. So if you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. It's pretty late here, and I've just been getting a lot of questions. I don't even have my contacts in right now, so I can barely even see the screen right in front of me. But I would not dare walk into the other room and potentially wake my 1 month old up trying to get my contacts back in. But generally speaking, this is not in any way, shape, or form an emergency video, right? I mean, it's just simply business as usual. We expected this. We knew it was coming, and it was just a matter of time until it did happen. And that's ultimately what it boils down to. It's just business as usual. And Bitcoin, if you look at the macro scale, of course, right? You go to their weekly time frame on, say, the BLX, and we put on our regression bands. We know that we're on course. Nothing has changed. And if anything, what we said about this earlier is just that it's a short-term bubble. And as much as we would want it to not be a short-term bubble, and as much as we would want it to just go to 100K immediately, we recognize that that's simply just not the case. That's not how Bitcoin works. When it moves up this quickly, over just a month or two, there will be nasty corrections down to the 20-week moving average. So the current price of Bitcoin while I'm making this video is 16.5K. So, we came out with a video around 18.9. I think it was, yeah, it was like around this point, and basically saying, you know what, it's all fun and games until you wake up and you're down 20%. So now that we've fallen, how does you have to think like, okay, well, how does the smart money react now, right? So we know the smart money was not buying up here. I mean, as we said before, generally speaking, the smart money is trying to buy within this regression band for the most part, right? The dumb money is pouring in up here, but the smart money comes in at opportune times during the market cycle. So, in the same way, we did a live stream earlier, and I was saying, hold on to this feeling. How do you feel? The next time we go into this type of Bitcoin bubble, you just need to recognize that these things will happen. And again, if you're selling on the way up, you're going to be labeled an idiot by a lot of people that are just going to say like, why'd you sell? We're going to go higher and higher. But then when you're over here and you're looking back at this point, you're gonna appear like the genius, right? And just because you didn't hit the top, so what, right? You did the best you could, you made profits, and then you called it a day. The people that just watch it go up and up and up forever, and never take profits, this can be problematic over the macro scale if you don't get accustomed to doing it. And the reason I say that is because a lot of people say, well, they'll just sell, whenever it gets to the next peak. It's just hard knowing where the next peak is, right? I mean, we all have our predictions, we all think we know where the peak is, but unless you come up with a systematic strategy to take advantage of these bubbles, it can be hard, speculate on exactly where the next peak is. So again, the purpose of this channel is to have a systematic strategy in place that's also pragmatic and not sensationalist to ensure that we never let a good bubble go to waste. And that includes a move from 10K to 20K in 2 months. Right? I mean, there's no way we can look at that and say that it's not a short-term bubble. Now, I've gotten a ton of, over the last few weeks, I've gotten a ton of people commenting that, we're going to 20K and then we're going to go to 100K in the next, year or so. While always that, as I've always contended, that is a possibility, we need to be, again, more pragmatic and look at the fact that historically speaking, if we look at prior cycles, it does appear that they are lengthening. And so we've talked a lot about a sustainable 20K, and this is one of the most probably misunderstood parts of my channel. When I say I don't think Bitcoin's going to get to a sustainable 20K until the end of 2021, I obviously get a lot of pushback for that, because you look at the price and you say, well, wait a second, why would it take that much longer when the price of Bitcoin is already at 19.5K or 18.9K? Like, why would it take us that long to get to a sustainable 20K when we're basically knocking on the door? And what we said again was that you just have to zoom out, right? And we need to look at, say, let's look at the daily chart. Yes, we were almost at 20K. However, the route in which we got there was not a sustainable manner, right? A sustainable manner is what we were doing over here when we were pushing up and then consolidating. These bunny hills we talked about, right? Pushing up and then consolidating, coming back down to test the 20-week moving average. And if we put the 20-week on here, right, coming back to test the 20-week moving average. This is a way that can sustain a 20K if we follow that pattern. Just simply shooting up to 20K over 2 months is not a sustainable manner in which to get to 20K. We will come back down, right? We will come back and try to regroup, and I'm sure we'll make more runs at 20K. We'll probably make more runs at 20K before the fourth quarter of 2021. There's a good chance we break it before 2021 and then come back down to hold it as support. Obviously, I will admit that if there's a chance even that we get to a sustainable 20K before, I think, right? And I mean, I would say a sustainable 20K by Q4 of 2021 at the earliest is a pretty reasonable approach. And if it comes earlier, right? If it comes in Q2 or Q3, great, right? We want to head up, we want to keep making money, but even if we get to a sustainable 20K before Q4, it does not mean, like, if we get there in Q3, it does not mean we're going to go to 100K by Q4. We need to, it'll take longer to build up to that level. It's just going to take exponentially more volume to go from 10K to 100K than it did to go from 1K to 10K. So this is the primary point. And when you zoom out, when you zoom out and look at these charts on a linear scale, I mean, we typically, most of the time, I think it's useful to look at, to more so look at log scales, because then you can really see the order of magnitude changes. But when you do sometimes just take a look at the linear scales, it does give you some perspective. So the purpose of the prior video, again, was, and I said it in the video, right? As long as the video I made at 18.9K, as long as that video helped one person, where I was basically saying, make sure you're not overexposed in the market when we're knocking on the door of the prior all-time high, we're 100% up in a short period of time. Make sure you're just not that guy that's overexposed. And this is the entire point of the video, right? And I'm not going to pat myself on the back here and say I called this was going to happen, because I didn't say that it was going to happen today. I said expect it over the next few weeks at some point, or months, right? I didn't know that it was going to happen today, and I'm not going to claim that I did. I just knew that, practically speaking, we would see a pretty significant correction by Bitcoin at some point soon, just because, historically speaking, in bull markets, we cannot sustain that type of a move for very long. Again, if you look at our bull market support, and we go over to the weekly time frame. So if you look at our bull market support, we recognize, and if I switch to a log scale, we recognize that these measured moves, We know that 20% corrections to the 20-week can happen. We know that 30% moves to the 20-week can happen. We know this. We even know that 40% moves to the 20-week moving average can happen, right? I mean, there's plenty of them. Here's a 40% move to the 20-week. So this is par for the course. And so the narrative of, well, institutional money is making it so that we're on this, this S curve phase of adoption and we're all the way down here, right? That's just the narrative of the cycle. Yes, institutional money's coming in. Yes, that's good for Bitcoin. Yes, it will probably drive Bitcoin to six figures eventually. No, it will not go there faster than we could possibly imagine, most likely. It's just simply not the case. Remember, institutional money, they're people too, and not all institutional money is smart money. You have to consider that too, right? I mean, it's not like every institution that has ever purchased any asset in the history of investing has always been on the side of smart money. Sometimes institutions are not on the side of smart money. And in fact, we talked about in the live stream, if you look pragmatically at say active investing versus passive investing, oftentimes passive investing is a lot better because it's just simply not worth the management fees of active investing. Yes, there are sometimes managers that outperform the market, and yes, sometimes they're worth the fees. But if you look at how often they can consistently outperform the market and how often they consistently be worth the fees, there's not very many people that do it. And yes, you can sometimes find people in hindsight, but finding them before it happens is the challenging part. So when you think about it like that, it doesn't mean they can't necessarily outperform the market. It just means that typically, even if they are outperforming the market, they're probably not worth the fees you're paying. And this is why passive index funds, in my opinion, are a lot better than ones that are actively managed. So I'm just kind of going off on a tangent there with institutional money. Yes, institutional money is a good thing. Yes, it will help the price of Bitcoin get to 100K, but that's what we always needed to get to 100K in the first place. We needed this exponential amount of volume coming into the space. It does not change the fact that we're going to have corrections throughout the market cycle. We're going to have 20% corrections, 30% corrections, and 40% corrections down to the 20-week moving average. And it's unclear yet if this move will take us down there. If we take a measured move from the price where we currently are, it would be another 27% drop or so for us to get to the 20-week moving average. So still a pretty substantial drop from where we currently are, but not as substantial as it was just a few hours ago. So remember, the Bitcoin bulls, in my opinion, are probably going to come out and put up, we might come out, the bulls could come out before we get to the 20-week, right? So let's be clear about that. They could come out before we get to the 20-week. But that is the last line of defense for defending the multi-year bull market. That is our line of defense. So if we drop back down there, this is where the Bitcoin bulls will want to hold the line. And we did a lot of these videos over here. We had several live streams of holding the line. If we come back down here, that's where the Bitcoin bulls will want to hold the line to ensure the integrity of the multi-year bull market. If we don't hold the line, it means that Bitcoin and a lot of other cryptocurrencies will drop pretty significantly in the short term. And remember, we're not looking for daily wicks, we're looking for weekly closes. We want the weekly closes, just like over here, to be above the 20-week moving average. As long as that's the case, then sentiment can change on a dime and we can rally back up, right? We might come down and just rally right back up. We might not even come all the way back down, and this could be a quicker turnaround point. But the point is recognizing that none of us know where the top is. None of us know where the bottom is. But we can at least try and do the best we can. And by the way, on the premium list, I took profits and published it at the 0.625 risk level for Bitcoin, and that corresponded to 18.9K. And it went to stable coins. And the reason it went to stable coins was because of the short-term bubble risk. And we talk about the short-term bubble risk being the distance above the 20-week moving average. So if you look at the price of Bitcoin minus the 20 week over the 20 week, and you zoom out, and we actually need to go to the weekly time frame, so we're actually looking at the correct thing. And if you zoom out here, and let's look at where we were. So this is where we were. This is the short-term bubble risk of Bitcoin, right? And we've peaked around this level several times. And so this was what helped guided me in thinking I would like to take my profits of Bitcoin and put them in Ethereum. I would like to take them and put them into some other speculative altcoin, but I recognize that we are at very dangerous territory with Bitcoin in terms of the short-term bubble risk, which means the distance above the 20-week moving average in a bull market. That risk is so high that I would prefer to flock to the safety of stablecoins and live to fight another day. And in the short term, it did not work out if you were, if you followed it, because I sold at 18.9K and then Bitcoin rallied to 19.5K. But again, that's just recognizing I didn't know where the top was. Just like with Link, I took profits in the summer at 18.50 and the top was at $20. But when you look back, it wasn't so bad. Right? It's not so bad when you take a more pragmatic approach to it. So I know I'm probably looking a little funny on the video because I can barely see the screen, but I just wanted to give some updated thoughts. This is starting to look like a correction we were talking about. When I did a live stream earlier, we were still around 18K, 17.5. Now we're in the 16,000s. I'm sure people are going to be worried, but remember, it's business as usual. We are on track. If anything, we are ahead of schedule. The fair value of Bitcoin right now is $10,500 according to the logarithmic regression fit to non-bubble data. We will spend a lot of our time during the market cycle above this point, but we also have to recognize that there's a good chance we're going to come back and at least get closer to it, right, than being twice the value above it for the duration of the market cycle, right? I mean, we were basically at 20K. The fair value is at 10K. This is quite extended. So we're gonna follow this. I want to show you guys one more chart. Again, this is our regression rainbow, and you can see during the last market cycle, we spent a lot of time between this region right here. Right, and if you zoom in, we came to the bottom several times and the top several times, right? This was basically what Bitcoin did for 2 years was in this band. And then if you go into the present cycle, we've also spent a decent amount of time in this band. However, this cycle does look slightly different. We had a short-term bubble up here, and then a capitulation down here. But for the most part, we've spent a lot of time within this band, right? We have spent a decent amount of time within this band, and then we just came back up to the top of it. So business as usual, not an emergency video here. Just want to give people an idea of where we are, and also to recognize that there's not a guarantee this is the test of the 20 week, which is at around it's around 12,500. This could just be a short-term pullback, and we could rally higher. But again, the 20 week, in my opinion, is where the bulls will come out to hold the line at the very latest, right? So this would be where we would hold the line. If we hold it, it ensures the integrity of the bull market. If we don't, then we're going to kick the can down the road. So if you guys like the content, remember to subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel in the description below. And a reminder, if you want to check out the premium list, we are having the Black Friday sale, so you can get access to that by following the link in the description below. And by doing it, you get access to weekly premium reports, weekly premium videos, the Telegram alerts channel, the Telegram chat room, the risk dashboard, which is what I use to trade, and some of these trading view indicators. So you get access to a whole lot of stuff. It's a pretty big community, but I think it is useful for a lot of people in terms of keeping people accountable when the bubble does come, because it's certainly easy to let the FOMO and greed take over. Right? It's certainly easy to let that happen. So we'll see what Bitcoin does. We'll see if it can get back into the 17K territory. But for now, I would just operate on the stance that this is business as usual, and we recognize that this market cycle will likely take longer than the last one. And if it doesn't, then so be it. But at least that's how I'm prepared mentally for the cycle, by assuming it will take longer than the last cycle, and that's just based on looking at prior cycle links, and also recognizing too that each cycle yields lower returns. So not only does it appear that the cycles do lengthen, it also appears that the returns do diminish. It doesn't mean you can't make a lot of money. It just means that you need to take that information and use it in a way and apply it, and recognize that Bitcoin likely will not do 100x from the bottom like it did last market cycle. The last market cycle, it went from 200 to 20K. This market cycle, the low was 3,100. For it to go up 100x, that put it at over 300,000. That's most likely just simply not happening. Not this market cycle. Maybe next, but not this one. So again, we've gone on long enough. I've rambled a lot. Maybe you can tell the reason is it's the middle of the night here. I don't even have my contacts in, and I'm just trying to provide an update for those who are new to the space, who maybe came in up in this region, right? Who came in up here. So I'm just telling you, right? Learn from your mistakes. So learn from the mistakes. Don't chase the bubble. You don't chase bubbles. You get in when it's lower risk time to get in, and you wait for the bubble to come to you. And despite the fact that this seems very bearish, as long as we come out and hold the line at the 20-week moving average at the very least, then the integrity of the bull market is still intact. So if you guys like the content, make sure you guys subscribe. Check out the premium list. You can find a link to the Black Friday sale in the description below. And I'll see you guys next time. Bye.